Hello and welcome to a new edition of Merrill's Market Madness. I usually do this on Monday, so we can call it Merrill's Monday Market Madness. But I just felt that today is Tuesday, February 1st, and I really wanted to be able to do this on the first day of a new month so that I could come to you with the final numbers for January and kind of compare it to our previous Januaries and take a look at how did January of 2022 compare to previous years? There's an awful lot of chatter out there right now about interest rates, and I'm going to share my screen with you here real quick and show you why. If you don't follow the market super closely, Freddie Mac has a website. I check it out very regularly. They have only been updating it once a week lately about what average interest rates are, across, probably all the mortgages that they're buying. And as you can see, we pretty much since the new year, we've seen a huge jump in interest rates, about 0.5% on average on a 30-year fixed rate mortgage, which is this blue line. And so it feels pretty dramatic. But if you zoom out to just like the 3-year view, okay, the reality is that 3.5% is pretty much where rates were at through most of 2020 and 2019, and much lower than they were before that. And you zoom out to a 5-year, still, I mean, even in 2017, and rates were in the fours and all the way up to almost 5% right there at one point in 2018. And here's the deal with that. Prices were still rising even then. So I think that our 3.5% rate is still significantly lower than the average rate that we've seen over the past 10 years, even. And we've been in a seller's market for the past 10 years. So anyway, that's a quick look at the interest rates, the chatter. People are concerned about affordability, right? Because prices have risen, almost 30% last year, depending on the price bracket. Lower end went up more, and higher end percentage wise didn't go up as much, but it went up a lot as well. Um, and and now combine that with rising interest rates, and and the Fed promising to continue to raise rates, it's got people nervous about affordability. But so far, we have not really seen any let up in the market. It is continuing strong as ever. And I don't think that rates in the threes anywhere, or even if they go up to around 4%, I think that is not damaging enough to cause a catastrophic shift in our market. Certainly, it will mean that some people can't afford as much. Some people might choose not to move. Some people might choose to stay in their current mortgage that they have refinanced at 2 point something percent, which could actually mean lower inventory, which could cause even more competition, which could cause even more increasing in home prices. I do want to point out, because people ask me about the Fed raising rates a lot. I'm not, first of all, I'm not I'm a real estate agent here, not talking to you as a lender. But there's a lot of misunderstanding. The federal funds rate is not the same as mortgage interest rates. They can be correlated. Oftentimes, when the Fed raises rates, it can create a raise in mortgage rates, but not all the time. I have seen cases where the Fed raised their funds rate, but mortgage rates had held relatively steady. Also, you got to remember that these rates are reacting ahead of time, right? The part of the reason that the rates raise so much is almost out of investor fear of well, they're talking about raising rates, so we're going to go ahead and raise our rates now. So it's almost, by the time they actually raise it, the reaction has already happened, if that makes sense. So a lot of it's speculative, I guess, is what I'm saying. But let's dive into the numbers. So right now, active in our MLS, there are only 4,820 active listings of any kind: single family homes, condos, townhomes, manufactured homes, any type of residential dwelling, only 4,820. Now, on February 1st of 2021, so 1 year ago, there were 5,165. So we have roughly 300 fewer homes available today than we had at this same time a year ago. And the reason why that's important is because average sales prices rose by like 25% last year. And then we're going into this year, going into our busy season with even less inventory now than we had at the same time last year. All right. We have a total of 11,400 pending contracts. 7,124 homes have sold in the past 30 days, giving us a month supply of inventory of 0.68. Again, to reach a balanced or maybe slightly leaning towards a buyer market, we would need probably about 4 or 5 months supply, and we're at 0.68. We have been below 1 now for a long time. But I wanted to just talk about January's numbers. So in the month of January, we had 7,120 closings in our MLS. The average sales price for those homes that closed in the month of January was $540,579. The average sales to list price ratio was 100%. So just on average, obviously there's homes that went lower, there's homes that went higher, but on average, homes are selling for exactly what sellers are asking for. And the average days on market was 36 days. Now, if you compare that to last month, December of 2021, so just 1 month ago, there were 9,274 closings. So the total number of homes that closed in January dropped by 2,000. 2,000 fewer home sales happened in January as compared to December. And I feel like sometimes different media outlets or whatever, national news saying you might, home sales plummet. Well, really, if you look back, that's normal and expected. Every January, home sales are much lower. A lot of people are not looking at homes during the December holidays, and they would need to be looking at homes in December to be able to close in January. And for I'm sure many reasons, January is our slowest month of the year. So if you compare it to January of 2021, so go back a year ago, almost very similar number of homes sold, 7,360. But go back a year before that, January of 2020, there were only 6,400 homes that sold. And that was like pre-COVID, right? So that was our last normal January. 2019, only 5,471 homes sold in January. In 2018, only 6,209. So 7,119 is above average. It's just barely below what we did in January of 2021, but not very much, and significantly higher than what we did in 2020, 2019, and 2018. And all the previous years before that. I didn't go through and look up all those years, but I'm confident in saying that we sold more homes this January than we did in any of the previous 10 years, except for last year. So home sales are not plummeting. It is a very typical to have a slower January. But let's take a look at the average sales price. So as I mentioned, the average price of all the homes that sold in our MLS in January was $540,579. In December, it was $530,461. So from December to January, our slowest month of the year, we saw an average sales price increase of 1.8%. In a climate of rising interest rates. So rising interest rates, slowest month of the year, and home prices still rose almost 2%. Okay. Year over year, so if we look back to January 2021, the average sales price was $443,000. So we saw a January to January average sales price increase of 22%. And then obviously the year before that, it was only 365,000 and then 327,000. And then way back to 2018, the average sales price was 315,000. So the point is, if you owned an average home in our MLS, you gained $10,000 in equity just last month. So that is going to most likely get even more severe. I mean, I'm working with a lot of buyers right now. I wrote an offer on a house that was very close to this average price over the weekend. That had 23 offers. A different house had 17 offers. So we are still seeing extremely high levels of competition and bidding, and going way above list price on some of these properties. I've seen several properties recently go more than $100,000 over the list price. When that happens, sometimes I get it like a little skeptical, like, okay, yeah, but was it priced intentionally low to create a bidding war? A little bit. So when you see a home going $100,000 over list price, maybe the price could have been a little more competitive. But I've also seen some cases where homes are going $50,000 and $60,000 above what the comps suggest the home is worth. Um, yeah, I just want to let you all know the market remains extremely strong despite rates, and we expect that to continue. And we had previously predicted average sales prices to go up about 15% this year. With inflation at 7%, that's really only a true gain of 8%. It might end up being even more than that. What I'm seeing so far in January has got me feeling nervous for my buyers, excited for my homeowners and investors. There's definitely a lot of home value appreciation that's going to happen in the next couple of months, because we saw almost 2% in the slowest month of the year. Imagine what it's going to be like in April and May and June when the market is truly, truly crazy. So if you found this information helpful, please share it. And if you are curious to know more about what the market is doing in your neighborhood, or you'd like me to do a free market analysis for you on your home to give you an update on what I think a buyer would be willing to pay for your home in this crazy market, that is what I love to do the most, is run those numbers. Even if you're not thinking of selling, I would be more than happy to run those numbers for you and let you know at least a close idea of what kind of value you're looking at currently. Thank you so much for taking the time to watch, and I hope you all have a great